Welcome to the REI Diamond Interview, your source for real estate investment jewels of wisdom with Dan Breslin.
Welcome to the REI Diamonds episode number 28 with Ian Walsh on how to run comps on a deal. I am your host, Dan Breslin, and on these REI Diamonds podcast episodes, I invite world-class guests to share their valuable experiences as it relates to real estate investing. In short, the information you're about to hear can make you money. Today's guest is coming back on the show for a second time, Ian Walsh, and I will reference his previous appearance on the show in the show notes if you're interested in taking a listen to that. I invited Ian on. We were talking together outside of the show, and we thought it would be a good idea to kind of provide an educational experience for our listeners on running comps on real estate deals, kind of from the perspective of a hard money lender, which is one of Ian's businesses. And I will also kind of make some insights and ask some questions and clarifications from the standpoint that I am, which is a fix and flip investor who's, occasionally coming and looking for hard money on a deal, and then also as a wholesaler. I know we have a lot of wholesalers who listen in on the show. We have a lot of fix and flip investors that listen in on the show. We even have real estate agents that listen in on the show, and people who would benefit by learning the thought process behind a conservative hard money lender's approach to running comps. So with that, welcome to the show, Ian.
Thanks, Dan. Appreciate it.
So, I guess I'm just going to kind of talk about a big issue that I've noticed recently, and I'm sure you're going to agree and have had the same experience, and that is we get a lot of wholesalers, a lot of time the newer wholesalers who are trying to find their way in the game, even some newer fix and flip investors, I'm sure you run into this, but especially with wholesalers, there's not a very strong comprehension of value. And me as a fix and flip investor, you as a hard money lender, I'm betting that we have a different perspective on value. And what I mean by that is we need to determine what's the actual value of the property, what's the actual construction, and what do we need to buy that for. And normally I'm finding that to buy that for price that a lot of wholesalers are presenting, it's just nowhere near in touch with, the realities of making a profit and making a safe investment for somebody with cash. I think on the flip side, and I get this from talking to a lot of wholesalers as well, on the flip side, a lot of new wholesalers' goal is, let me just run out there, lock up a property at any number that I can sort of get the seller to agree. So they run out with no knowledge of the comps, the neighborhood, and the market conditions, and they just negotiate on the spot. If the seller wanted 150 and they get them to take 130, they feel like they won, regardless of the fact that there's other cash comps in the neighborhood, maybe for 90, 95, and 100, and a real deal for a wholesaler should be like 85 to 90. You could give me just kind of your experience on that, and then we'll kind of dive into maybe a step-by-step on, the process that you and I use for running comps.
Yeah, sure. So, that's very accurate. And probably, I can't emphasize to people enough that no matter how you're investing or whatever fancy way you want to do it, fix and flip, buy and hold, whatever it may be, it all starts and really lives and dies by your ability to accurately comp. I actually think, and I'm a huge proponent of this, that comping is probably the most valuable skill set you can have as an investor, because if you're wrong, you're simply placing your money on the wrong bet. If you're right, and you're right a lot, you're going to make money. Even if you make mistakes, you're still going to make money. So I find that you're right with the fact that, a lot of wholesalers, and it's not because they don't want to find a good deal, it's because they don't know how to comp a lot of times. Or it's exactly what you said, they think they won because they negotiated off 20 grand and they think that's part of the process, and it is, and there's a bit of a satisfaction feeling to getting something under contract. But the more properties you put under contract that are the wrong numbers, you're just going to, A, waste a ton of your time, and B, you're going to have a lot of headache because you're about to have to go tell the seller, I can't do this, and really you're just shooting yourself in the foot. So it's so important for your own time, for your ability, for your reputation in this business to be good at this particular skill set. And that's really, from an underwriting perspective at Hard Money Bankers, that's all I do. You can call me a hard money lender, but the real skill set that I have is the ability to comp and protect money and make sure people are in the right deals and so forth. So, people like to complicate it, but it's really not. You're either good at comping or you're not, and you're going to make money based on that, or you're not. You're 100% correct. People just put things under contract and they think they've got something, and usually 2 months down the line they realize it didn't close, and it usually comes back to the fact that they didn't comp the property correctly. That's usually what it is.
Let me add something too, Ian. I just took a note here. I'm taking notes, obviously, and I want everybody to understand kind of my perspective here on our conversation. You said that the ability to accurately comp a deal is like one of the number one skills. For those the people who are listening who know me, they already know kind of, my story. The people who don't, and maybe just hearing this for the first time, I've closed more than 300 deals and only bought one property off of the MLS. So I can say that I have some ability to accurately comp. However, that said, I'm sitting here excited and in anticipation to figure out the step-by-step process that you are using to look at comps, because I know there's a few nuggets that me, the experienced investor, is about to pick up, and it's going to help me to more accurately negotiate and close, more profitable, safe deals going forward. I mean, me, like anybody else, I've lost money on deals. I've made money on more deals than I've lost money on, but I'm excited. So
good. I'm glad. I think good. I mean, everybody learns something always, right? So as soon as you say you know everything, you probably don't know nearly enough. So I can appreciate it, and I'll give you and anybody listening as much information. I'm an open book to it. There's no reason. The better people get at comping, the better it is for everyone, the investing business and so forth. And there's a lot of things, too, from an underwriting perspective that maybe a flipper might not have looked at or noticed or recognized. And a lot of what you and I do, I've had conversations with you in the past, is similar. We speak the same language in comping or how you look at a property. But because the better and the more you can add to your toolbox of comping, for any investor, really, the more accurate it'll make them and therefore make them more money in this business. So, but yeah, I'd be happy to tell you guys whatever you'd like to know. I'm completely an open book with that.
Cool. So let's start from the top. Let's say, as an example, I bring you a deal, Ian. I give you an address at 123 Main Street. Let's get the step-by-step process that you're going to approach this deal with, and each of the little decisions or, insights that you make along the way of each step.
So one thing I'll start with is that if you don't have access to your local MLS, do yourself a favor and find a way. I don't care if you go and become a realtor's assistant with some local MLSs and you can pay for it and you'll have access to that data, or you get your realtor's license. That is in itself worth whatever cost associated with it. You have to have it. You have to have MLS access. And there's other services out there that people talk about, Zillow and stuff. If I have a borrower coming to me telling me what they found the value on Zillow is, I know right away I have red flags, because I know it's not going to be, or Trulia or whatever, site. It's just not going to be the data that you need to be inside your MLS system, because there's just way too much being missed or inaccurate, because truthfully, Zillow and Trulia use algorithms, and they've gotten a lot better. And I actually do look at them from time to time, but not for real value. That's more of maybe the 10 or 15 things I'm looking at, that's number 14 or 15 is just a feel. So really it starts inside the MLS system that you have. And I actually want to make sure I was in front of a computer today so I can actually pull up our MLS, our local one, which I know will be different for people that don't have, we use one in Philadelphia area here, and then I can walk through what I do every day, all day with comping. I mean, that is it. That's all I do. So
the first place you take a deal, Ian, just so we're clear, you don't do any preliminary quick checks on Zillow. You go straight to the MLS on every
straight to the MLS. I'm logged in there all day long. Yep, because it's right there. And then I have my own system, and I'm going to start the way I always look at comps from an underwriting perspective is I look as close as I can to the property as recently as I can to an extreme. So a lot of people say, I have a property. It's, I have a comp from 2 years ago. I have a comp from a year ago. It's half a mile away. That information is dated. What you're really trying to do from a fundamental standpoint is identify your local market. And a market isn't, people say, I know my market. Well, every subsection, especially, Dan, you know this, inside of Philadelphia, there are certain areas that you have to be so tight to your comps because a half a mile is hundreds, if not potentially over $1 million in difference. You can't go that far. So what I like to do is say your market, to define what a market is, really is the geography of the actual property. So you might have a 1 block radius that is the market for that property. That is the market. And then sometimes that there's enough comparables to that market, 0.2 or 0.3 or 0.4 of a mile. But I always start right away. So I usually go into my MLS. Dan, if you know, with our MLS, you can click the MLS tab or public records. I start with the MLS one. And the first thing I'm doing is I go in, I type in my address that I'm, say it's 123 Main Street.
Can we check out one that's in Philly? So
Go ahead.
Go ahead. 2023 Dickinson Street. This is a deal I was brought to my attention. I kind of want to, get your take on the value retail-wise, because this is a real funky area where this is located, where one block east, I believe, is like a 250, 280 plus comp, and then this block is kind of in the opposite direction where the gentrification wave is going. So I'm interested to hear your take on this.
So I'll type that one in. I know that area pretty well, but let's just say I don't. And what I do is I click on. So I always check the availables, like what's available, what's on the market now, what's pending, meaning what's going under contract for what price, and what's settled. You need those three things to give you an accurate perspective. Now, the two most important things are settled and pending. That is the number of the comp that people are actually paying for that property. I get people all the time that say, I have this listed and that listed. That's just what somebody's asking. You can go out and ask $1 million for your car. You're going to get $1 million for your car? Probably not. So, but if somebody paid $1 million for that car or that particular item, now you have a market that you can actually reflect a value to. Now, does that mean that I completely disregard actives? No. I'll still look at what people are listing. I want to see, are they trending up? Are they trending down? And you can tell at a quick glance. This is not a very long process. It takes me probably 10 or 15 minutes to run a comp, sometimes less. Right now, I'm going to bring up the actives, the pendings, and the settled. Withdrawns and expireds and so forth, I don't need them as much, but maybe, some areas there is a lot, and that's also a red flag. Why are people withdrawing? But nonetheless, I'm going to keep it very direct here. So I'm going to start on 2023 Dickinson with 1/10 of a mile. Now, the reason inside the city that I'm 1/10 of a mile is because it's inside the city. If I'm outside the city in a suburb, I'll probably start at 3/10 or 2/10 of a mile, and then I'm going to work my way up. So I'm going to do 1/10 of a mile in 6 months, and then I usually hit the next button, and our MLS is fantastic. It has a map that you can bring up right next to it, and that map gives me the visual confirmation that I need to see a market, because it's really hard to see it without that. Okay, so now I'm not even really looking down at the properties below, which really typically have pictures of the properties and so forth. I am just looking at the map where my subject property is. I've got a 4-bedroom, so the closest stuff I have, I'll try to paint a picture for the people listening. The closest stuff I have is where I start. It doesn't mean that's the value. It just means that's where I start to get a feel. So I have one on the block asking, and I have one at the end of the block on South 20th Street that's sold within the last 6 months, number 22 for me. 4-bed, 1-bath. How many bed and bath is it, Dan, the one that you're talking about?
It's a 3-bed, 1-bath. So typically, I'll start with a public record, copy and paste that into another document just so I see my square footages and bathroom counts.
Perfect. That works too, yeah.
3-bed.
Okay, so I have a 4-1, and people say, oh, is a 4-1 or a 2-1, does it make much of a difference? Some areas of the city, it absolutely does. Queens Village or something, you can. But in this particular scenario, I'm just getting a feel, because a lot of this is field-based. So what I'm going to do is I'm going to look at number 22, which is on South 20th Street. I'm just going to go to the listing real quick. It's sold for $140 at 4.1. I'm going to do a run through on the pictures, because the pictures are now telling me the condition of the inside that it's sold for, because condition always has to match price in terms of what it sells for. So eventually, if you keep dropping price, somebody will buy it in the condition that it's in. And as I look through this, it's not a renovated property. This is not a blown out property. So, and that's what I'm trying to comp against. I assume the person coming in to, let's say, flip in this scenario is buying something that they're going to renovate for top dollar, and they're going to get top dollar. So in this scenario, I'm looking at this and I'm saying, nah, this is more of an investor property at 140. It's more of an investor pickup. I don't know if that's the right investor price, but that's an investor pickup. Then I go, okay, perfect. I go over to an active listing, which doesn't have as much weight, but it's a 3-bed, 1-bath, 1,100 square feet. How many square feet do you have there, Dan?
I believe this one is 992. So
okay, it's a little smaller, but it's not killer. It's not like a half the size or a third of the size. It's just a different style on that block. Is that about right?
I believe so. And then just a little added information so whatever the wholesaler was bringing me. He brought me 1929 Dickinson Street selling at $280,000 in February, and he brought me 1940 Garrett Street selling at $260 in May. Just so you know, that was what they were looking at, the high comps, and I'm not really seeing that same high number here.
No, I'm not seeing that. I don't even see those. And I mean, any wholesaler trying to wholesale, they're going to, anybody that's truly buying, a cash buyer won't care what the comps are. They won't. They'll see the address. They will know if it's the right number or about there, and they'll run their own comps. I have people all day long that send me comps to try to, I guess, as if I'm not going to look at my own comps. Any serious cash buyers looking at their own stuff. You're right in your assessment. Now I'm looking at the one on 2045 that's asking 244,000, 3-bed, looks like 1.5 bath. I'm not sure, or half bath. Days on market 43. So I'm looking at days on market because this tells you something about your market. So if I have an active listing sitting for 200 days on the market at $250,000, it means it's overpriced or there's something wrong with the property. And that's telling me things are sitting here. In this scenario, though, it's only been 43 days. It's asking 244. They're probably just a bit high because the market is solid right now. But the renovation is right. The renovation is what you need to do to 2045 Dickinson. It's spot on, blown out. So now I'm starting to think in my head, okay, somebody for some reason thought 244 was the number. There's an investor that came in, put his hard-earned money on it and said, I'm going to renovate this and try to get 244. It looks like he might be a little bit off. Maybe it's 235. But I'm starting to get a feel now for where my number needs to be. And I'm starting to say, okay, I might be somewhere between anywhere from 200 to 240. I don't think it's 244, but anywhere between 200 and 240 is probably where it's going to fall.
So you're looking at, I mean, this is important for me to look at. I do something similar, but we're looking at the active across the same block across the street for 244.9, and we're saying, wait a minute, if the competition is renovated and they're asking 244.9, it's active, it hasn't sold. I know from experience that my sale prices are typically $5,000 or $10,000 in negotiation from the asking price. So, you know, that tells me there's no way we can get, you know, or count on a number of 244 or the 260 that was presented with the deal. You know what I mean? It's the competition in this comp.
Exactly. The market, somebody took a stab at it and said, I think it's 244. Well, it's sitting right now. I'm not saying 43 days is too long to sit, but it's not going off the market in 3 days. And this is a pretty hot area. I see a lot of, and I'll probably jump around a little, but one of the nice things I see about this picture in front of me physically is I see a lot of reds, and reds means solds. If I have an overabundance of reds, it means the demand in that area is high. If I have an overabundance of greens, which are active, it means the supply is too high. If the supply is too high, the only way that you match supply to demand is you drop price. So it will mean the price will have to come down to eventually meet the condition by which people will pay. So in this scenario, it's just one. It is a hot area. What it means is the moment that hits the right price, somebody will come in and buy that at that right number. It's just not quite there, I don't think. So in that scenario, and then as I look around, I have some investor sales, which are all, it's something you interestingly brought up. It's important to know what investors are paying. That gives you a really good feel for, like, don't not look at the properties that are shells, because you'll see really quickly what investors are paying. In this scenario, I have one on across the street on Dickinson, and I have one or two across the street. One's sold for 72, one's sold for 96. So your investors are going to pay between 70, call it 70 and 95 in this area, 95 on the high end for, you know, a shell. So you know, as an investor, other investors that came in put their hard-earned cash on it and said, this is where I'm comfortable picking up, because at this number, when I do whatever I'm going to do to it, there's a margin in there that I'm comfortable with. So it's a good feel to say, hey, what's an investor picking it up for? It doesn't give you an end value, but it gives you a good starting value for wholesalers. Like you can learn a lot by what other investors are paying in a particular area. And you're just really looking at the properties that need renovated and what they were picked up for. So somewhere between 70 and 90, I'm guessing, is your investor price here. I've got one at 185 across the street. I'm going to take a look. It's a 2-bedroom, not a 3. It is the same square footage as yours, but it's not. 185. Okay, so this would be a concern to me. If you go to that one, 1514 South Woodstock, this is renovated. Not the most beautiful renovation, but it's renovated. And it's listing, asking 185, been sitting for 45 days. It's a 2-bedroom, and it's a straight through. And it's very close to this property. So I have a concern now that it's going to be, you have the guy asking 244 on the block, and then you have the one right across the street, 1 bedroom less, renovated. They did get the price at 185 with 2 bedrooms, 45 days in. So I look at that and I say, okay, if I add a 3rd bedroom, what's that really worth to me? Call it 10, maybe 15 grand. Went in 45 days, similar square footage. I'm starting to get closer now to say this is probably somewhere between 2 and 210, depending on your, now, and then I would start to look closer to your block. But let me keep looking at this. And this is all done within 1/10 of a mile in this particular area. I am not If I go 2 or 3/10 of a mile, I'm losing my number. There's no chance in this area that 2 or 3/10 of a mile will hold a good number. I'm going to look at 1520 as well. South 20. That went for 165. I have no pictures here. It doesn't give me much information, so I have no idea if it was renovated or not. Probably wasn't, or if it was, the realtor did it injustice.
The description says newly renovated.
Yeah, they didn't do justice to the pictures then. So you literally could not move a property if the pictures aren't up. Realtors will just blow right by that.
I mean, he sold it in 8 days, so they probably gave it away to like a pocket buyer.
They very well. Yeah,
you're probably right.
You're probably right.
That's kind of a red flag. I mean, 165 for a renovated property, 3-bed, 2-bath, 1,500 square feet, 0.1 miles away. I'm thinking to myself, you know, the 210, if this guy only got 165, it's tough to tell whether or not his renovation quality was, you know, blown out or whether they just kind of did a paint and carpet. But it's still, you know, it's a bigger house.
Yeah, and we just won't know, unfortunately. So I got another one that I don't like the renovations, but they tried to renovate it and it's a 3-story just south of that on 1551 South Lambert. They got 190, 11 days on market. So that's probably a little bit underpriced, but it's a 3-story. Now here's the other definitive thing that I would look at when I'm going to go back in a second to look at more information. So this is all these numbers I'm coming up with are across Dickinson, and there are very distinct dividing lines inside of Philadelphia and any city really. I can tell you right now that I'm not going to look anywhere west. We call them double yellow lines when we're comping, and they're literally either double yellow lines or major landmark things like train tracks, cemeteries, highways. I'm not even going to look at those comps west of South 21st Street. It's only like, it's under 1/10 of a mile away. I know right on my marker here that anything west of that is going to be a different market. It's not going to represent the same market that I'm trying to look at here. I'm also going to look to see if what's south of Dickinson right now is what we're trying to, is really truly a comp, because north of Dickinson might be better, which is where your property is. What I'm determining here, though, is the further I get away from Dickinson, if you start clicking on these and start looking at them, the further south do I get, do they become higher priced or lower priced?
They're definitely lower priced.
Right. So what that's saying, and I'm looking at, and then I go north of Dickinson, and I start looking at the stuff above it to see, hey, is there a trend? So it is. So if you go north of Dickinson, east of South 20th, you are starting to, somebody got 260. I can see the gentrification in here, but you can see which way it's moving, which way the values are moving based on where the lower numbers are, and then as it moves up and through your area. So it looks like east of South 20th, there's some good stuff there, also some risky stuff. North of Dickinson probably looks better. So I'm going to go back to the main screen, and now I'm at 1/10 of a mile, but instead of going out further, because I have plenty of inventory within 1/10 of a mile to tell the story I'm trying to tell, I don't need to go to 2/10 or 3/10. There's no need. There's a lot of inventory. What I'm going to do is extend my time frame to 12 months instead of 6, just in case anything falls outside of that.
So what we're doing, this is important to make a note, is on the screen, because we can't tell how many comps, you know, in a 6-month period within your radius that you chose to pull comps would give you an idea of enough activity on the market. I mean, are we talking 30, including actives and solds? Are we talking 10 comps? Are we talking like 60 within, you know, the chosen 0.1, 0.2, or 0.3 or more radius, so that you get what's the number to get a real gut feel and start to tell a story in a 6-month period on comps?
Yeah, so in this particular market right here, I have like 10 within 1/10 of a mile is plenty of inventory. If I have 10 within 1/10 of a mile. That are sold? Sold, yes. I like sold. I like sold or a very high amount of sold, low active. That's enough for me to get a really clear picture. But that's also very particular. You go out into the suburbs, you're not going to get 10 properties until you go out to about 3/10 of a mile a lot of times. So that's where those distances really come into play. But I have all that I need to know within 1/10 of a mile. If I go outside of that, I'm just trying to build a case that isn't there. So you're really trying to extend the geography to get yourself a big enough sample size. Once you have that sample size, in which case here we have about 10, I have enough. I don't need to go any further out. Now I'm going to go back in time to see where the market was and where it's going. Now you're in, you know, this area, like, you know, the Point Breeze or Fishtown area. Those areas are always hot. You always have enough inventory in the right areas within 1/10 of a mile. So you're in obviously great areas for where you're looking, Dan. It's just, you know, the comping can get tricky down here. I went back 12 months.
Yeah, and just to make a note, the reason that in the city it's 0.1, 0.2, or 0.3 of a mile is because of the density of the housing. I mean, you have, you know, 25, 30 houses in one block, whereas you go out into the suburbs and you might have 6 or 7 houses on a block. So that's why you would be required to take a larger sample size. And one of the things, too, I notice in the Chicago neighborhoods when I pull comps, so this will apply in other markets as well, and we have a similar gentrifying conditions in certain neighborhoods as they're turning around, becoming hot, getting new construction going on, similar to Point Breeze that we're talking about here. And one of the things that's interesting is we will go 0.3 of a mile in some neighborhoods in Chicago on the south side where there are, 10, as in like 3 or 4 actives and like 4 or 5 solds and maybe like 2 pending, like a very, very low number of activity, even though the density is so high. And then when you get into these hotter neighborhoods like we're talking about here, we see much more transaction activity. I believe that's driven by the increase in value, so people are more inclined to be able to sell and pay off debts, mortgages, and, walk away with a significant amount of cash in these areas where the values are rapidly rising, as opposed to areas where, there's not a lot of activity. There's really not a lot of cash to go around from the sale of a house to pay off tax debt, water debt, mortgage debt, or even walk away and start over again. So I think that's, just a little explanation, a couple dynamics you'll see as you're pulling comps.
Yeah, and that's going to move city to city and area to area. And that's just in your market, what you're doing and so forth. But I agree with that. So as I look at this a little further, I'm actually looking now. So I went back 12 months and I see a really nice pocket here on Garrett Street and South 20th. I have 2 good sales and are very close. So this thing there's definitely some value east of Wilder, but it's not quite there. So I'm starting to think east of Wilder, you can get your 260. And I see the comp that the guy's looking at on Dickinson. On the same block, 10th of a mile, you got 280. But I'm not comfortable with that number. I'm just from a feel base, it's not there.
Well, we had that competition for 244 on the same block. This is where the weight of an active can come into play. If you see someone selling something cheaper and you plan on doing a similar rehab, you wouldn't want to kid yourself to think you get more, because this guy's in the middle of testing the market with a number that's lower, which immediately disqualifies a $280,000 sale price.
Exactly. That's exactly right. And if you're putting your money on it, you were banking on $40,000 in profit, and now you're $40,000 off. Your profit's gone. You did all that work for nothing. So it's important to know that. Now, I'm not saying the number is 280 or isn't 244, but I know that 244 seems a little high right now. And the market's cooling just a hair, and might be reflecting that right now coming into the winter as well. So now I've got a pretty clean picture, and I'm thinking my gut is starting to tell me, if I'm analyzing this from a conservative standpoint, I'm starting to think around 220 is probably where, a really nice renovation is a very safe number to be at. Lower than that, I think you're going to make a lot of money. Higher than that, and you're starting to get into the risk zone. But I think probably about 220 is where this is going to go. But I'm going to keep checking something. So I'm going to go now, after I've gotten that feel, I go over to the public records, which has they'll have different records in there. I don't really quite know in trend how or why they do it like that. But what was that address again then? It was
2023. Yep.
Okay, so now I go to the public record tab, which is also going to give me even more data, because I'm really trying to get as much data as I can in this scenario to give me the most accurate number. And I'm always going to err on the side of conservative. You never really want to push your numbers, especially when you're buying and so forth. There's just no reason to do it. There's always another deal out there. So I'm going to do the same thing. I'm going to start with 12 months out just for the sake of the conversation. But I'm going to bring up the exact public records for solds, because sometimes I miss something on the MLS, like there might have been a seller's concession or something that as I'm skimming through, I miss it. You really don't miss it in the sale amounts on the public record. I don't know if you've ever gone over what a seller concession is, but it's really a seller giving money back on an FHA for buyer's closing costs. Well, if you have, I don't know, just 6% seller concession or something, you could have a $10,000 swing pretty quickly. And that would be the actual sale price, meaning the buyer paid, instead of $240, they paid $230. Well, that's the comp. $230 is the number, not $240, because you had a seller's concession. So
what did you click in public records? Because you're pulling the comps, right? You're pulling a set of comps there?
Yeah, I'm pulling them right now. And
You click on what? Address search?
So, yeah, what I do is I go to public record address search, yes. And I type in our county, and then I type in the exact address, and it's obviously residential. And what I usually first do is I click on property details just to take a look. I don't know if you ever run into this, Dan, but sometimes somebody tells you something's one thing and you go to the zoning, which is the code description, and you want to see just to make sure that this isn't a commercial property or that's not a commercial being as a residential. So you can take a quick look at that. You can also take a look at the transaction history of the property to see if there's any quick red flags. I don't see anything. Some refinances, it looks like some sales, nothing major in there. You can see who the buyers and sellers were and so forth. I know one of those buyers. I go to the comparables at that point, which I have now hit comparable props in the top left. And then I do, again, 1/10 of a mile. I'm going to do 12 months from recording date, which is the date it was actually recorded, from settlement. You can do settlement or recording. It's just giving you a feel. And then I go to the bottom right corner and I check where it says lot size. I select that at 100% and I put building square footage 100%. And this is going to give me the full spectrum of everything I'm looking at here. And then I get a list of last 12 months sold recorded dates in the last 12 months from 1/10 of a mile. I tag the top 24 and I generate a report. Again, it's going to give me a visual map. The visual end of comping is really important. Okay, and I'm going to start looking at, actually we can see with that guy that's trying to sell for $244, we can see what he bought it for. And then he renovated it and put it back on the market, bought it for $30,000, which was probably a steal.
Wait, what's that?
2045. Yeah, you can see what he paid for it originally. So now as I'm looking at this, there's a lot of investor pickups in these areas. Yeah, I'd want to be south of 70. I thought earlier I was going to be between 70 and 90 as an investor. I think south of 70 is a better pickup price, but 86, 85. So there's a lot. I mean, this market right here is really hot because a lot of these that I'm looking at right now are the investor pickups, meaning in the last 12 months, these things were picked up and now they're back on the market and selling already, which is a good sign. Again, that's a hot market. So this won't give me a ton of information right now because all of this I'm looking at are pretty much what they were picked up at investor prices. However, it will give you a better indication of what the investor pricing should be, which probably is closer to between 50 and 70 as opposed to 70 to 90 as I look at these. I'm just scanning over and looking at them. And then you can scroll down and you can look at, and Dan will go over this at your at the December 9th presentation, but I'll go over comping like this as well because I think it's just so important for people to understand. But as you scroll down, you'll go to, I'll have a list like this in the slides where you will have the square footage, the beds and baths, and it gives you a list and a very nice, which I think is the sheet that you export into Excel for yourself to look at. It gives you a quick, like, spreadsheet version of the properties. Is that about what you were using, I think?
For what?
When you were doing a side-by-side earlier, you were looking at the square footage and all that stuff. I thought you had maybe an Excel spreadsheet you were looking at or something like that.
Usually I just noticed the square footage in the gentleman had sent me an email with those 2 or 3 comps, you mean?
Oh, no, I thought you were actually pulling this, what we're looking at now, and I thought you were putting that on a different screen next to you.
Oh, no, actually, all I used to pull in the public record was originally, so this is something new for me, and somebody had just shown me this over the weekend. All I would pull would be the property record with the mortgages and, you know, square footage and all the sale history and everything like that. I find that gives you a lot of information on how to negotiate with people, what they bought it for, sometimes comes into play with what they'll accept to sell the property for. So I'll actually just put the one property record for the property them comping into a Word document and then take a look at that on the side with the comps that I have in the picture. So this is a pretty cool view right here that I'm looking at as well.
Yeah, this is what my eyes will glaze like real quickly through at all times. And what I'm looking for here, I'm looking for anomalies. So one of the big things in comping is you always want to ask the question, why? It's like, why did you get this number? Why was it at this number? So as I look through here briefly, and I guess it would be easier if people could see it, but I'm really looking for like building square footage. Is there an anomaly in here? I see a lot of properties between, call it 900 and 1100, 1200 square feet, and then I have one at 1500. That's an anomaly. Okay, so that one I'm ruling out right away. It's just not going to be in the same ballpark. I also go down even further, Dan. If you go on the screen, you actually get like kind of like a different version. It says subject property, comparable 1, comparable 2, comparable 3, and it has like a little picture and then more of a description. I don't know if you see that.
I'm a couple steps behind, I think.
Okay, so there's a different roll down on the screen, and one of the things I'm looking for here, I'm looking actually at the tax assessment value here, and I'm not looking at it because I care what the city thinks this is worth. I am looking at it for an anomaly, something that stands out, that's off the bar chart, that's outside of there. So if I look at, maybe you can use any number. You can use the tax assessment, the annual tax amount, and it's not actually giving me any kind of value because they're net. I'm not trusting the city to tell me what that is. But what I am looking at is if you look at our subject property at $73,000 in tax total assessment. But then I look at comparable one at $42,000. Okay, I want to know why it's at $42,000 and sold for $185,000. Why is that so out? Because everything else is $73,000, $65,000, $77,000, $85,000. Everything is within like the same median pricing of what they thought the value was. But then we have one. So if I was actually buying comparable one, I'd be trying to figure out real quick. And then I go down and I say, I'm looking for a reason that this thing would be so far off an anomaly. And I don't see it here. But that's not the property we're buying, so I don't really much care.
I would guess, we're looking at, pictures on that one, at least in the city of Philadelphia, I would guess that this was probably a shell up until this current buyer purchased it and did a renovation and resold it. So the shells, a lot of times I've noticed, will have like lower assessment values than properties that are a little nicer. That's right.
And the weird thing to me, though, about that, though, and you're right about that, is that this thing sold for $185,000, though. Why? Like, who paid $185,000 for a shell over there? And I don't know.
Well, unless they renovated it. Bought it, renovated the shell, and then resold it.
If they resold it after, it would have to have been a quick renovation for sure. That's possible, but it's just a little bit of a red flag to me. I want to know because I see a lot of the other assessed values, 65, 77. So I just use that as like a feel. Whereas like Zillow or Trulia would be like number 14 or 15 identifying factors on my list. This might be up there at 14 or 15. It doesn't give me a ton of information, but that's how I kind of use tax assessments to see what they're saying and why they're saying it. So I use this screen compared to the other screen. Now, this one gave us a whole lot more of non-renovated properties, so it doesn't give me as much value, whereas the original screen, which means the market's hot over there, gives me a lot more up-to-date stuff. With this, if I'm pinning this – and then I'll do one other thing. So I don't see a lot of the properties I go to or that we either buy or underwrite. I will then go to good old Google and type in 2023 Dickinson. I do this all the time because I'm not going to the property most of the time unless I really need to see it. And then I go to Google Street View. I want to see the street. I want to see the block I'm dealing with. And then a lot of times I'll go to the block. I'll type in the other address of maybe something that's sold for a lot of money. And I want to see if there's a significant difference in area or block. In this case, not sure yet. This block does not look bad. Particularly now, Google can be dated by 2 years, but it still gives me a feel. So I'm also looking for board ups, by the way, because end buyers that, especially from an underwriting perspective, if I'm thinking one of your exit strategies is potentially an FHA loan and you have 3 or 4 board ups on the block, it's very hard to get that, and that will make my number much more conservative. As I'm speaking, I'm looking at Google Maps. Definitely in a gentrification process here. I can see where people are taking one property, fixing it, selling it. You can see which ones are specifically doing that. So yeah, I'm thinking my number here is going to fall. I probably analyze it around 210, 220 is where I'd start my after repaired value at. As you go west a little bit, it looks a little nicer. And again, this isn't a hard value because it's dated, but it gives you just a good perspective of the block and if there's anything you might have missed in the visual perspective of it. I'm going to cross over as I go. Just want to see something here. 19. Yeah, okay. No alarms. So yeah, I would be in that range, Dan. On that property, 210, 220, something like that would be probably where I'd start my evaluation from. And then you got to figure out and then I don't know, let's see. What's your renovations down here? Probably for a 2-story, call it $60,000, 210 times. So I'm going to say from an underwriting perspective, I use basically what the wholesalers use. It's not far off. I use about 65% of the ARV here. So let's just say 210 times 0.65 gives me 136 minus 60 in reno, 76.5. So now I did my underwriting analysis saying 76,500 is with the 60,000 in renovations. And if we remember earlier, we looked at the investor pickup prices, and I said you're really going to want to be between probably 50 and 70 on here. So let's say there's 70,000 renovations. We're in the ballpark. So we just backed our number out and we realized that we fell right into where the investor pickup numbers are. And that wasn't designed that way. That was me just running the numbers as we speak. And then I said, okay, I probably did run my numbers correctly because this is where other investors are buying. And if I'm going in and making an offer on this house as a wholesaler, I'm probably trying to grab this thing 55, something like that. And that's start to finish on how I comp all day long.
Yeah, we were actually in the deal at 2045 Dickinson that the guy got for 28.5. I think there was a wholesaler and then it was flipped out to somebody else, but our number there was right around that 25, 28, 30. That house was also in like a much more decrepit condition than the one that we're comping out now, like the floors and the basement, everything. It was more of like an $80,000, $90,000 rehab right on the same block there.
Gotcha.
So yeah, I'm inclined to agree with you. The price that is being offered to me and what they're having under contract is just not going to work for me to do a deal there.
Nah, yeah, and really what you want to see is after you run all your comparables, when things like that just happen, when I backed out my numbers and I got all the way back down to the investor price range, and I don't ever do it to try to get to it. I just look to see, hey, did my numbers come out where they should? And when they do, when you have a starting number that works its way back out to an investor pickup number, and you didn't know that number until you got there, that's usually a really good piece of a confluence to the scenario you're building. You're saying, okay, I worked my way backwards and I got right to where I needed to be as an investor from my 210 number that I thought I was at, or 220 number. I backed out my renovation costs, and this is where people are buying and picking up. Yep, I'm probably right. So that's how I do it, and that's I hope you and your people listening are getting a lot out of that, because that's literally how most underwriters should be doing what they're doing from a hard money perspective. A bank, I don't know, that's a different story. But from what we do, that's how we do it.
So I'm going to do like a quick review here. I have step one, MLS. You start at 6 months, and you got to choose a radius that provides maybe 10 to 20 actives and sold or solds. You got to have a good sample of active properties and a good sample of sold properties in the radius that you're pulling comps. You start at 6 months, and you're getting a good feel, and the whole process is to like narrow it down, zero in, get closer to where the value is, and that's exactly what we did on the example here. So we start at 6 months, we take a look at everything, and we see what activity is going on. And I remember a few years ago when the market crashed, and you couldn't go outside of 6 months because the values might have been 10, 12, 15, percent higher beyond 6 months ago, especially when, the tax credit expired and things of that nature, and we were in a declining market. Now we're in a little bit more of, I'll say, a stable market at this point in time. So I'll go 6 months, the same way you said. And then step two is I'll go back 12 months. So I'm looking a little further back. When I look at the comps as a fix and flip guy, I'm looking for two things. I'm looking for like my 3 lowest cash comps to see what other people were buying for investor numbers, and I'm also looking for like 2 to 3 renovated comps at the same level that I am renovating mine, which is not always possible because out in the county, there's just not as many. The deals that we looked at here, Ian, we're in a gentrifying area where we're looking at, if anybody's listening, you can go on to Google Earth and look up 2023 Dickinson Street and go up and down that block on Google, and you can see there's literally houses on the next block that have no roof on Google when you take a look at it. So we're dealing with a neighborhood where there's a lot of inventory of properties that need complete and total renovation. But when you start comping deals out in areas where the neighborhoods were mature and kind of stayed decent and well maintained over the years and were never really never became blighted the way this neighborhood did that we discussed, you're going to have trouble sometimes finding renovated houses. A lot of times in neighborhoods in suburban Philadelphia area, houses will change hands with like older kitchens, and they'll change hands with older bathrooms in there still from the 50s and 60s, but the properties overall are well maintained. They may have like new windows and they've been painted over the years, and they're basically being sold to buyers who are going to live there, and the people who are going to live there aren't buying these based on making a profit. They're buying them and they'll do a kitchen a few years after they buy them. So some neighborhoods, you're not going to have the luxury of finding 1, 2, or 3 completely renovated houses, to determine your ARV. It's going to be a little bit more challenging. So you go back 12 months, and I have done that, and usually I can find 1 or 2 that have been completely renovated or well kept by their owners and sold in a near rehab ARV condition. And then the third step that you have was pulling a public record. You pull the public record and kind of check the comps, and it will show us like a list view from the public record that way. Looking for things like days on market that are important. You're comparing square footages so that you can get like an apples to apples kind of feel, and you're looking to eliminate any of the anomalies that you'll see. And you can also check that based on the assessment value. Most counties, city tax assessors have some value that they place on a property, and will kind of give you an idea. I mean, if it's a property that has an $80,000 assessment value, that may not be a representation of the retail value, but it is going to give you a comparison of, the next property down or the next block that had that assessment value of 80 and sold for 190, reasonably, not something you could take to the bank, but reasonably you can expect yours to sell somewhere in that same 190 range when you start kind of looking at the assessment value. So for me, You mentioned that, and I've been doing that for a long time, and I remember when I first realized that there was some sort of relationship between the tax assessment value and the actual value of the property sold, and if you get used to looking at those on a large scale, it can definitely help. And then your fourth and final step was Googling the address and kind of taking a virtual walk up and down the block of where the comp in the neighborhood is, which is beautiful. I mean, you can evaluate deals right from your desk and then only go out and take a ride and look at these properties after the fact. I mean, you said that the renovation was probably 60 to 70,000. I kind of had 70,000 because a lot of times, in this neighborhood where we're located, we're blowing out, the entire first floor, and we're taking down all the interior walls, and we're having to relay out and reframe, re-drywall to give it a more modern feel in order to compete with the other properties on the, that show up in the comps. So I think that was spot on. So I'll just kind of briefly go through the opposite side of it. So like for me as a fix and flip investor, I don't have time to go in and spend 15 minutes doing MLS comps oftentimes to figure out if it's a deal that's worth putting that kind of time in due diligence. I look at, 5, 10, 15 deals a day to find the ones that I buy or even properties that I end up wholesaling. And so for me, I actually start at Zillow, believe it or not. I actually start there and I quickly pull Zillow and I look at a few of the, the comparable sold which show up yellow on Zillow. And I'm just getting a brief feel for the neighborhood. If the numbers aren't quite matching up when I look at Zillow, then, there's really not much need for me to put 15, 20 minutes checking comps and evaluating the deal. If somebody had, like I said in the beginning of the call, newer wholesale and they locked up the deal for just a number that's just too high and unrealistic, somebody like me, a cash buyer who's looking to renovate properties, I can't spend that kind of time. I get way too many emails and, to a degree it's I don't want to waste any time. So I quickly look at Zillow, get a feel for the asking price, and then if that is in a realistic, reasonable deal zone, it's getting close to being in the strike zone, then I'm going to go through the same procedure that you had mentioned here with the MLS. So that's kind of like the only shift.
Yeah, it's just a filtering method. Yeah.
Yep, exactly. Well, cool. Did you have any other?
No, man, that's everything I got. That's the open book.
Sweet. You'll be out on December 9th at the Philadelphia Ring meeting. And Ian, you also, if you want to put a plug in for your company at this point, how people can get in contact with you if they're in the Philadelphia market and what other region you're working in.
Sure, yeah. Philly, South Jersey, email Ian at hardmoneybankers.com or 215-839-3271. Either way's fine.
All right. Well, I thank you for coming on the show for a second time.
You got it, Dan. Appreciate it. Look forward to seeing you.
And thank you all for listening to this episode of the REI Diamonds podcast. Are you enjoying what you hear here? Maybe you know someone else who'd enjoy the episode. The best compliment you can give me is a referral. You can sign up to receive an email update of new weekly interviews at www.reidiamonds.com, and I'll send you my special report called 7 Sources of Off-Market Deals. That website again is www.reidiamonds.com, and you can also subscribe in the iTunes app. Just search REI Diamonds and click subscribe. Until next time, this is Dan Breslin signing off.
Thanks for listening to the REI Diamond Interview. To receive the REI Diamonds newsletter and interview monthly, sign up now at www.reidiamonds.com.